Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
All right, today, welcome on the show, Andrew Campbell. Andrew, thanks for joining us.
Thanks, Jacob. I'm happy to be here. Looking forward to talking to you and your listeners.
Yeah, absolutely. Thank you. Andrew, so could you tell us a little bit about yourself and how you got started investing in real estate?
Yeah, absolutely. So like I said, my name is Andrew Campbell. I live in Austin, Texas with my wife and two young kids. We have a 6-year-old and a 3-year-old. My real estate investing career started in about 2012, 2013. We bought a duplex and a fourplex here in Austin around the same time. Actually, the journey started a little bit before that, though, and we initially started looking and thinking about real estate around 2007, 2008. I was living out of state, and my dad had a massive stroke, and so I ended up moving home and kind of taking care of him for a while and realized that, and ultimately had to quit my job and that I needed to find a way to kind of create some passive income, and was looking for things that would generate that, and read Rich Dad, Poor Dad, kind of lit the fire a little bit. And, it took a few years, but that's kind of how I got interested in it. Got serious about it, bought the first couple properties, and had the help of a friend along the way who was a realtor and had a couple investment properties himself, and kind of relied on him and trusted him and some of the stuff that I had read. And we jumped in, and from there it's kind of taken off. We built up a portfolio between my brother and myself, built a portfolio of 76 units between Austin and San Antonio, and now we've grown into syndicating large apartment deals.
Yeah, that's great. So could you talk a little bit about what those 76 units look like? Because those are primarily multifamily, small multifamily, that is, right?
Yeah, it's predominantly small multifamily, duplexes and fourplexes. When we first got going, there were a few foreclosed single-family homes in there. We're actually peeling off a couple of those this year and, kind of grown into the larger properties and seen the power of the efficiencies, economies of scale in the bigger properties. But it's predominantly fourplexes, duplexes. Along the way, we've picked up, some packages of fourplexes where we picked up, 24 at a time, that sort of deal. But it's all been that same, Class B minus kind of C plus property in Austin and San Antonio.
Yeah, awesome. So between you and your brother started picking up these small multifamilies within, Texas, San Antonio, Austin region, and then have started, syndicating apartments. What kind of led you to that syndication model?
It just really kind of grew into it. I think when we started this thing, it was really, let's create some passive income. One of the goals was making sure that we could sort of handle whatever it was life was going to throw at us. A couple of years after our dad had a stroke, our mom was diagnosed with cancer. And that was really kind of got the oxygen on the fire. We really got serious about wanting to be able to, take care of our dad, kind of protect the time we had with our family. And we saw how it worked, with single family. We had a couple duplexes and we had a couple fourplexes. And so we had a pretty strong mission and a pretty strong why we were doing this thing. And as the kind of business grew, we were managing the properties ourselves. We were seeing that the fourplexes outperformed the duplexes and the duplexes outperformed the single family, that it just made sense that to kind of keep growing and continue to get bigger properties. I think the other thing is we kind of built up the 76 units with all of our own capital. And along the way, just sort of fell in love with the business and really fell in love with the model and the idea of doing it, in a more full-time professional manner. It was something that we were doing on the side of our corporate jobs, kind of managing those and working and family and everything, and felt like if we could dedicate all our time and energy to doing real estate full-time, we'd be successful at it and we would sort of accomplish that initial goal of financial freedom. I talk a lot about haven't quite gotten to financial freedom, but we're at a place where we're financially independent. And I think that's almost more important to me these days. So we can do what we love every day and participate with investors doing it and build a really great business for ourselves. And most important, do it for ourselves so we're not tied to a corporate job and can kind of do it when and where we need to do it.
Yeah, that's great. Well, it sounds like you guys are making it work. talking about the economies of scale. I don't know if it's the economies of scale or the multifamily bug getting the fever, whatever you want to say that what it is, but you quickly realize that scaling up is beneficial. It's like you mentioned, fourplexes are a little better than your duplexes. Duplexes are a little better than your single family homes. So yeah, it just makes sense to keep going with it. Sounds like you guys are doing a great job. So Andrew, could you talk a little bit about what your projects are looking like these days? A little bit about your apartments and that side of the business.
Yeah, happy to. So like I said, we kind of leapfrog and we're buying, fourplexes and here and there, and we pick up a package of them. And once we decided to go at it full time and full bore, so, there's that middle market space where, to us, it seems like it's kind of difficult to make things work. And, I call it no man's land. It's sort of, a 5 unit to a 75 unit that a lot of people are really successful at, but it was a space that for us, I couldn't make sense of it. So we kind of leapfrogged all of that and started looking at, bigger 100+ unit deals where you can support on-site property management, on-site maintenance people. Everything just works a little bit better. And, you kind of figure out it's the same amount of work to go do a 20 unit or a 30 unit as it is to do a 200 unit. So we kind of circled that 100 unit plus space as the place we wanted to go look and operate. And that's kind of where we've been focused. We've currently got a 192 unit deal under contract in San Antonio. I was telling you right before we came on, I'm actually headed down tomorrow to do the due diligence and get inside all the units. But that's a deal we're really excited about. We like San Antonio a whole lot, and having grown up in Texas, we're very focused on the Texas market in general, very comfortable here and feel like it's got sort of the fundamentals you'd look for from a job growth perspective, from a population growth. And we've got the added advantage of being here, being, centrally located, that we can get to any of the big cities quickly. And we know them, having grown up and spent time in all of them. So really excited about having that under contract. And it's a typical deal that we look for, value add, kind of a class B asset, class B minus asset that was built in the early 80s. It needs updating. So our business plan is to go in and fix it up, generate some more additional income, and look to operate it with a professional manager, and we'll look to hold it for, the business plan is hold it for 5 years.
Yeah, right. Now, with you and your brother at Wildhorn Capital, you guys have a process that you implement on all of your properties. Could you talk a little bit about what that process is?
Yeah. It's pretty simple and just something that, I've got a marketing background. My undergraduate degree was advertising, and I spent a bunch of time, in ad agencies, and it's a visualization, really. People can check it out, if they go to our website. It's pretty simple. We want to, number one, find the property. We call it acquisition, and that's kind of my day-to-day focus, always looking for deals, networking with brokers, finding things that are off market that sort of meet our criteria and get it under contract and purchased. Step 2 is reposition the property. That's, come in and that's back to our sort of core as a value add investor. We want to fix it up. A lot of times we're going to rebrand it. Again, kind of leveraging my marketing background, making sure that it's going to appeal to the right type of tenant based on its location and the demographics in the area. Should it be more of a young professional tenant class, and, making sure that the amenities meet what a young professional would want versus what maybe more of a family profile might want. But that's kind of step 2, and that usually takes 18 months or so, depending on the size of the property. We're going to go in and update all the interiors. We're going to update the exterior, just make it breathe some new life into the property. Then we're going to look for some sort of, refinance event, supplemental loan, kind of depending on what the structure of the loan is. But we feel like in that first couple of years, we're adding a tremendous amount of value. And one thing we didn't talk about earlier, one of the main reasons I like multifamily so much is you can force appreciation. When we look at our single family homes, they kind of are worth whatever the market in the neighborhood they're in says that they're worth. And you can fix them up a little bit, but you can't necessarily create tremendous value. In the multifamily space, you can force appreciation. So in that repositioning time frame, people are buying businesses. And so if we buy and the operating income is, say, $1 million, and 2 years in, it's $2 million, well, we've doubled the worth of that business. So we look to refinance that and capture some of that value, kind of early on in the process, which allows us to distribute some capital to investors and makes everybody feel good about it and lowers the risk for everyone. And then it's just sort of operating along, and we're just owning it, maintaining it. We call this period cash flow. It's just making quarterly distributions to investors and operating the property. And then we're always looking for that right time to exit, the disposition of the property. And depending on what's happening with the market and what's happening with different interest rates and things, we're going to look for the right time and the right value to get out. We typically look for sort of a 5-year window, but that could happen anywhere between years 3 and 7, just kind of depending on, do we hit our numbers ahead of time and what's happening with the market.
Yeah, awesome. When you're looking at these properties, are you guys self-managing them or do you hire third-party management?
Yeah, we do everything third-party management, something that we've talked a lot about. And I think feel like growing our business and what we're really good at is focusing on, finding the right opportunities, having that overall vision around what the reposition is going to look like. It's not necessarily implementing it. So, we hire third-party management who's an expert at that, Class B asset repositioning, managing the construction, and we kind of oversee them, but we use third-party managers.
Yeah, right. Now, being pretty centrally located in terms of geography, do you work with only one property manager that you have a relationship with, or is it multiple different property managers?
We've just got one relationship that we feel really good about, and again, having a pretty specific focus from a market perspective, we can get good coverage, and they've got representation, in the markets that we're playing in. Yeah.
Okay. Now that we're on the topic of building your team, could you talk a little bit about how you've built your team and how that team has been instrumental in your success in these apartments?
Yeah, and that's been a bit of an organic process. And I think our team, has changed a little bit, as we've built and grown into the business some. Mentioned the first properties we had, really kind of leveraged the team of a friend and a fellow investor who kind of, encouraged us to go in. And, at that time we had, he had a mortgage broker that he liked to use and recommended. And he had, trades, construction, GC people. And he actually would help us, do some of the rehab work. As we kind of got into it and learned, some of the folks we liked to work with and some of the folks, we wanted to replace, it just sort of evolved. And I think it's continuing to evolve. At this point, we've talked about the third-party property manager. And again, I think we have our personal portfolio is now in the hands of a property manager, and that's a different group than the group that manages our big syndicated deals because they have their different business models. So finding the right team and the right people on the team and what their core strength is, I think is really important. So we've got property manager in place, both for our personal stuff as well as the Wildhorn apartment properties. We've got attorneys in place. We have relationships with brokers that, those guys are a part of your team and critical to our success. I think probably the biggest piece that we've got is a good partner. So, realizing quickly that this is a team sport and no one can go do 200-unit apartment deal by themselves. You are going to need a team of people. You're going to be raising money from investors, which is a full-time job. You're going to be managing the property manager and the asset management piece. You're going to be constantly reaching out and building those relationships with brokers. So we've got some partnerships in that area that really have allowed us to sort of grow and scale the business. That I think it's critical that you find a partner that's got complementary skill sets because it is a team sport. It's not something you can do by yourself.
Yeah, absolutely. Andrew, you mentioned something that was kind of interesting. In talking about the demographics of these apartments, I'm sure your philosophy shifted a little bit from when you were looking at duplexes and fourplexes in the San Antonio and Austin markets to now looking at 200 plus units. Could you talk about what kind of demographics you guys are looking at? Any kind of resources you could suggest to the listeners?
Yeah, it's interesting. I don't know how much they have shifted. We started out and the properties we've got, I mentioned kind of B-, C+, largely, kind of blue collar workforce housing. Being in Texas, we get our core sort of tenant and demographic is a Hispanic family. We've had really phenomenal luck with good tenants, very, very high retention, talking in 3, 4, 5 years, having zero turnover in some of our buildings. They treat the property like their home. We make sure to keep it up and, maintain it for them. And we've had really good luck with that group. So, just from personal experience, I really like areas of town, where you get a sort of concentration of Hispanic families. Obviously, as we look at the bigger properties, they're going to be dispersed around town a little bit. And I think, there we just are looking for what are the demographics and looking at sources like CoStar, Axis Metrics, looking at what's the immediate area. Again, I think we generally know these, and that's a big part of our job. You need to be an expert in the immediate area that you're looking in. So before we would go even get serious about a property, we already kind of know the demographics of the area just based on who the employment sources are, what the home values are in the area, that sort of thing. But it varies a little bit property to property, but we like the sort of family style, folks that are going to be long-term tenants.
Yeah, right. Yeah, that's a good point, Andrew. And the reason I ask that is because maybe we've got these listeners that maybe own a duplex or a fourplex, and when they bought that building, maybe they weren't looking at all of those big economic factors, any kind of migration or population or job growth or any kind of thing like that. But when you get into these larger properties, you have to start thinking about those things. So just wanted to see what that kind of mind shift was in between those smaller properties transitioning into the larger ones.
I mean, it's not a huge shift. I think that's one of the things I always talk with people about. They say, oh my gosh, how'd you go from, buying duplexes to looking at 200 unit, closing on 200 unit deals? Like, well, the same sort of demographic macro trends are in place. Home ownership is at an all-time low. People either can't afford to or have differing attitudes towards home ownership. People want to have a roof over their head. So things are whether they wind up living in a duplex or living in a 200 unit complex, the macro level things are the same. What starts to vary some is why would somebody choose to live in a duplex, maybe with a yard versus an apartment complex with a bunch of amenities, a pool and a workout facility and those sorts of things. So I think about those things, but at a high level, I think I take great comfort in knowing that we feel confident about the shift to rental housing and, the fact that you think about where we are today in the market with interest rates as low as they are. I feel like if people can't buy a house or don't want to buy a house today, if there's a correction and rates start to go back up, they're not going to want to buy a house in that environment.
Yeah, right. That's a really good point. You hear people running around, kind of sky is falling mentality that rates are going to rise. And that only keeps your renters for even longer. Like you said, if they can't buy now, then if rates raise, their chances of buying are not increasing, that's for sure.
Right.
So Andrew, let's switch gears here and talk a little bit about some of your best and worst deals to date. Would you like to share some of those experiences with us?
Yeah, absolutely. Happy to. Best deal, I always kind of think about the very first one we did. Number one, it's obviously the one that kind of was the tipping point and got us into the business and kind of, when I think about it, really changed our life trajectory. I mean, I never would have projected when we first bought a duplex that I'll end up quitting my job and working, on apartments full time. But it also financially was a great deal. It was a duplex that we bought here in South Austin. We paid $212,000 for it. We put about $18,000 to $20,000 into it. We fixed up one side of the duplex. And last year we had it appraised for $360,000. So we were able to pull all of our initial down payment out of it. And today it cash flows. It rents out for about $2,900 a month combined. And it's just, to me, it's something I always think back to, just witnessing the power of investing in real estate, certainly benefiting from some crazy appreciation in Austin, but just been a tremendous deal for us.
Yeah, awesome. How about the worst deal?
Worst deal, fortunately, I don't have any like horror stories that we've had, just awful things. I mean, certainly you get some horrible phone calls occasionally where, recently had a leak in a slab where an old plumbing line, was cracked and we had to go kind of reroute the lines into the walls, and probably a $6,500 project. So you get those. I think you just learn to appreciate those as a cost of doing business and something that's going to happen, and you make sure you're budgeting for them and you're prepared for them financially, but you can't avoid them. But we haven't had any just horror stories property wise. We had what I call we avoided a potential disaster. My brother was getting ready to close on a fourplex, and place that, neighborhood we had been looking at and were comfortable with. And he got a phone call. Something had happened, a blip on his credit report. And so 2 days before he was going to close, he wasn't going to be able to close. And, because we're doing it together, we were able to move the contract into my name. We just said, hey, all the terms are the same. I think I ended up writing him the check for the earnest money he would have lost, and ended up closing in my name. So we joke that, it was like $1 credit card charge on a card he didn't know he had. And,
yeah.
it's like $1 charge almost cost us this property, but we ended up getting it closed, just had to transfer, who would own it. And I give him a hard time about it now, when it's also done really well. So it was probably a more painful story for him than for me.
Yeah, way to hold that over his head.
Yeah.
Awesome, Andrew. Well, Andrew, could you tell us a little bit about, you touched on it earlier, but why you're doing what you're doing, what drives you, what motivates you? I know, you mentioned just the lifestyle of having the financial freedom and the peace of mind, but is there anything else that keeps you going?
I think the number one is passion for this business. It's working for ourselves and being able to build this, thing that we get to do together, and this lasting sort of company is the way that we envision it being, is liberating and inspiring, and something that gets us out of bed every day. The idea of sort of lifestyle engineering, I call it, just being able to create that flexibility, in our day-to-day life. One of the things that I have on my vision board in my office is a picture of the school bus. And I make an effort to every day that I can go at 3:30 when the school bus lets out to be there and grab my daughter off the bus. So things like that, are kind of the big reasons why. And it really comes back to getting sort of woken up when both our parents got sick and realized that, we were on this sort of corporate path that didn't know what the exit ramp looked like. And so now kind of creating that exit ramp and enjoying some of that flexibility that you working for yourself can provide.
Yeah, that's great. Andrew, what are your future goals, both personally and with Wildhorn Capital?
That's a tough question. I think I don't have too many metrics, defined goals for Wildhorn Capital. The big reason for that is, again, I mentioned 5 years ago, I never could have predicted this is what I'd be doing. I know that we've got a goal of sort of doing 5 to 6 deals in the next 12 months, taking advantage of rates being where they are and the Texas markets, being strong. But beyond that, I don't know. And I think, kind of taking it year by year, seeing what happens. We talk a lot about how big do we want to build the business? Do you want to be an operation that's got, 40 employees and asset managers? And do you build out a property management wing internally? Or you just keep it really small and nimble and just, have a lot of third-party partners? So on the business side, it's really tough to say. And I'm very comfortable in that model just because, again, I couldn't have predicted I'd be doing this 5 years ago. So I don't know. I know in 5 years' time, I'll still be doing apartments investing and I'll still be in the space, but I don't know what that looks like. And I'm kind of just enjoying the ride.
Yeah, awesome. Yeah, well, 5 to 6 deals within the next year. I mean, it sounds like you've got some defined goals, and I'm sure you'll have no problem achieving that. What about personally, Andrew?
Personally, I think a big thing, it keeps coming back to family, making sure that I've carved off time to take advantage of some of the flexibility, to be home and be present, with my kids. I mentioned that they're young, and it's certainly a struggle for me to, turn off work and be home. But I want to do that as much as I can. I've got a personal goal of meeting 5 new people every week, which kind of is 1 per day of the work week. And, a lot of those conversations are real estate focused, but I just love connecting with people and talking to people and, helping them out. I get a lot of people that, want to pick your brain on how did you build a 76 unit portfolio and work a job. So that's a goal that I've got that I'm pretty good at keeping, just really kind of sitting down, whether it's a phone call or a coffee, averaging one per day with somebody new that I don't know, and just figuring out how I can help them.
Yeah, I like that goal of setting a certain quota of meeting new people. Really cool. I should implement that myself.
Yeah, well, you got a great platform here, right? I mean, you and I get a chance to talk here, and this is my conversation for Monday.
Absolutely, check it off the bucket list.
Yeah.
All right, Andrew, as we're wrapping up here, we've got a series of lightning round questions. Just some questions we'd like to fire at you, and you just shoot from the hip. How does that sound?
Let's do it. I'm ready.
All right, cool. Well, starting off, what was your biggest hurdle getting started investing in real estate, and how'd you overcome it?
I'm sure you hear this a lot, but it's just taking that leap. We talked about it. We had read the books. I'd read, Millionaire Real Estate Investor and Rich Dad, and my buddy was really like going to handhold us through the process. And it still just took that sort of nudge over the top. And really, it was, when our mom passed away, that sort of the final, it's like, okay, I get it. We got the message. We need to go do this. We need to go create this passive income stream. But just, having the sort of courage to take that leap.
Yeah, that's something I meant to mention earlier. You said that you started thinking about investing in real estate with your brother in 2007, 2008 range, and didn't actually buy your first property until 2012, 2013. That's a lot of time for you to learn the business, get to know things, but it also speaks to those people out there who think that maybe this is a, jump in all of a sudden, get rich quick kind of thing. You've put a lot of work in before you ever got started. So, you're not some overnight success and didn't hit some lucky strike or something like that.
No, I always say it's get rich slow, and I think that the sooner you can start, the better off you'll be. And, just if you're on the sidelines, education is great, but action is better.
Yeah, I like that. All right. So our next question, do you have a personal habit that contributes to your success?
A couple of things that, at least I do a lot of. Number one, I'm just sort of an info junkie. And so I'm constantly reading and listening to podcasts, looking for ways to learn, improve. My wife gives me a hard time. I say I'm reading, but I actually listen to everything through Audible. I don't actually read much.
Yeah.
Just, being a sponge for what's out there, whether it's real estate related or personal finance related or whatever, mindset shifts. And then the other thing that I do and make a really conscious effort is just being grateful. People talk a lot about having a, gratitude and writing down the things you're grateful for. It's something I really, strive to do daily and not even necessarily at a set time. I had a example the couple weeks ago. I was taking my dad to the airport at 2:00 on a Tuesday. He was going to visit. We have another brother, and just the ability, flexibility to be able to take him to the airport at 2:00. Or go to a movie. We took our kids to a movie a few weeks ago in summer. On a Wednesday or something. Just really trying to be grateful and for being in the moment and kind of what all that's good in your life.
Yeah, awesome. Andrew, do you have an online resource that you find valuable?
I'm a big proponent, big fan of Bigger Pockets from a real estate perspective. I think it's sort of the place to be. I stay pretty active there, posting things and answering questions. I think it's kind of my main source that I like. And, then the podcast that I mentioned, just got a steady stream. I feel like I can never get through them all.
Yeah. What are some good podcasts do you like?
I've got a handful of real estate ones, the Bigger Pockets one, Joe Fairless's podcast. I like Rod Leaf's podcast a lot. I try to, sometimes get outside of real estate too. Tim Ferriss is obviously a big popular one. Hal Elrod's Achieve Your Goals podcast,
right,
for mindset. And just some of the NPR things. I mean, it's a long list. I couldn't read them all off now.
Yeah. Just last week, I was at a podcast movement 2017 in Anaheim, and oh man, there's just so many podcasts out there. I just want to listen to them all, and you kind of have to sort down and narrow down the ones you've got time for. So it's always good to learn about new ones.
Yeah, it's interesting. One things my wife and I have started doing, kind of, we sometimes can't find TV shows we want to watch together, is we'll listen to podcasts, and then that always sparks some interesting conversation. Just plug it to your speaker at night after the kids are in bed. And I think podcasts that have been an interesting conference to go to. Podcasts are changing the world, I think.
Yeah, awesome. I love it. All right, Andrew, what book would you recommend to the listeners and why?
We talked about it before, and I'm sure you hear it all the time, but Rich Dad, Poor Dad, I think such a philosophical game changer in kind of the way that I looked at the world. So I would, if you haven't read that, I would absolutely read that. I follow that up with the Cash Flow Quadrant, one of his other books, which just a great book. And then outside of real estate, I recently read a book, Tribe, by Sebastian Junger. It was just a really interesting read about, sort of the social connection that drives humans and some really interesting things about, platoons and wars and Native American tribe culture and sort of what's lacking in that today in today's society where, we sort of are busier than ever and walk around with ear pods in our ears, not connecting with people. I thought it was a really interesting book.
Awesome. Yeah, we'll link those books in the show notes for the listeners to find. All right, and last question, Andrew. If you were to give advice to your 20-year-old self to get started investing in real estate, what would it be?
Just start today. That's always my biggest regret when people say, what do you wish you'd done differently? Just getting started earlier. And I would tell them just, get educated, but gosh, jump in and go buy a duplex and rent out the other side, and you can do the house hack thing, or just get a condo and rent out a couple of the rooms and just start to see for yourself the power of, living for free and having other people pay down your mortgage. And I think you get that education, as early as you can and in as easy a way as possible. It's just going to springboard your investing career.
Yeah, right. Perfect. I couldn't agree more. So, all right. Thanks, Andrew. Thanks for that. So is there anything else you'd like to leave with our listeners as we're wrapping up today?
Yeah, the kind of parting piece of guidance that I give people is, kind of back to my goal of connecting with people at one a day, is just really go out and build great relationships. One of my mentors It's always reminding me we're not in the real estate business. We're in the relationships business. And you never know how those relationships are going to pan out, but just, connecting with people. And I think that's why I connected with that book Tribe so much. Really feel like I've found a tribe of people like yourself and your listeners and, that are interested in real estate investing, interested in seeing, the power of it to grow people's wealth and change people's lives. And so I just connect with as many people as you can. I'd love to connect with anybody out there. Feel free to email me, Andrew at wildhorncap.com, or visit our website. There's a free a download you can get to kind of lay out our process or how we built our portfolio. But just connect with people. This is a great industry with people love to help each other out. And if you're out there, just build great relationships.
Yeah, awesome, Andrew. Well, thanks for that. And we'll link your contact information in the show notes along with wildhorncap.com. And Andrew, we certainly appreciate you coming on the show today and couldn't thank you enough for your time.
Jacob, I really enjoyed it. I appreciate your time.
All right. Thanks, Andrew. Take care.
Thanks. Bye.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.